Hey everyone, happy Sunday. It is the 19th, new all-time highs. We have about 85 to 88 tickers to go through, plus the indices. I will have a full video just for the indices later tonight. The idea is very simple. There's not much to say about the indices except for the IWM, the small caps. The main indices are broken out into highs. You're seeing on my screen, new all-time highs. Two arrows that were not fulfilled, eventually they do fill them. That happens on the way down, and it should happen on the way up. So basically, if we drop 1.5%, would be just normal procedure, and it's either now or later. The sooner the better. You establish a better base. That's the concept. Now there's a conversation to be had around the small caps, so stay tuned for the video at night, or if you go to sleep early, you probably get it in the morning. It's about 4 minutes long, just strategy. Okay, so the easy thing to say is that the bulls have nothing to fear, according to them, and the bears see a nothing but fear. And somewhere in the middle lies the truth. So we'll see what happens down the line. All right, so let's jump into the tickers. Apple is almost always the first one. It's done well recovering, and I've said that it was the one with the most potential because it had the most to make up. And if we look, I zoomed out on purpose. A lot of lines focus on this blue box. This was an earnings box from, I think, February. Actually, I repeated it in red here. So this whole period of time that it's been chopping up, it's inside one candle from the earnings in February. So it has a November reaction before that below it as support, and now it's battling the February earnings reaction. So we'll see if they're able to break out into the 194 plus. If it hits 193, it loses, it fills all the gaps in the chart, and I'm not talking physical gaps, the gaps in the candles. It'll be all at fair value, 193. So that's a number you should probably remember, and I'll put a line for it to give you a visual right there. That's on a daily. So Apple is not an obvious entry point. It has a similar form as the small caps. In other words, they do have the opportunity, they do have the momentum, but they need to break out a little bit more. Otherwise, they're susceptible to a dip. 182, 181 could be revisited. It's a giant gap in the chart if I take out all the lines from the gap up on the May earnings, which were mediocre at best, but there it is. We can't argue with the actual price action. This chart is too wonky for an Apple-like company. It shouldn't be like this. It's as stable a business as we have, yet it trades like they're discovering oil every day and then losing it the next day. It just doesn't make sense. So very choppy, very violent. They can break out, of course. And if you think about it, if you look at this giant chop zone, if Apple goes into an all-time high, it can go to 220, if not more. Just from that perspective, a chart that does this, where it rises and then it spends so much time consolidating, once they break out of the consolidation, they shoot for this area, if not 230. This is a larger picture concept. Not too dissimilar to this one, where it rallied from here to here and it chopped and it broke out and it's chopping. It can break out, step up. That's not what I see for it, but it all depends on the market. If the market continues to 560 SPY, this one will be much higher than this, so it's hard to short. Okay, meanwhile, it's hard to go all in, so you have to find a balance. ABBV. The easy work on erasing this set of candles has been done. Most of it has come back. So now we're left with battling this giant candle here on earnings. So it should be harder to get higher from here. We've discussed this in the last few weeks as an opportunity, dip buying opportunity. I would relegate myself for that. I would rather catch a dip. The closer to 162, the better if it gets there. Hopefully without losing a new low, because that's what's been going on, it seems. They rally, they drop, and they make a new low. They rally, they drop, and they make a new low. They're rallying. On the next drop, they better hold halfway. So you don't want to see it lose 159. If it does, I would get out. It's probably going to 150. Okay. I'm not tracking how much. Okay, so there's no earnings here. Adobe, good company. You could say it's in a support zone, but if you lose 460, you're probably going to 380. It's a good company and all, and it has earnings coming in 25 days. So I want to caution you against the possibility of this. Oh, look at that. Okay, so I already drew it. That green possibility, but also the concept of this. They lost 520-ish, the red line, which was a heavy volume line, and they're losing the bottom end of the heavy volume. Below this tick right there that I mentioned, 460, there's not much volume, so it'd be easier to fall. So onus is on the bulls to get back to 520 in order to avoid a disaster. Until then, the bears are in charge. Again, it will follow markets most likely. Okay, thanks, Brad. Allstate, this just does not look like a good place to start. I don't know much about the business of insurance. It seems like their bottom line is getting thinner just by looking at their P&L there. The sales are growing, but at the expense of profitability, that light-colored turquoise. So maybe that's one-off thing. In any case, it just doesn't inspire a starting point for me. Maybe closer to 148, 142. What if it takes a long time to get there? So what if it does? If you're looking to enter a stock at a place where it gives you the most upside potential, this does not look like one. This is a shorter term look about it, and you can see how there are sellers above 173 and buyers below 165. So it's stuck almost exactly in the middle of the range. A lot of sellers up in the zone, a lot of buyers down below. Do I have lines? No, I don't, but I don't need lines to see it, but you can see sellers up here, buyers down here. Ping pong between those two areas for now. Okay, Amazon, speaking of ping pong, it just made a high, so finally caught up with the fad of making new all-time highs. Everything I drew on there is still valid. The letter V is for void in volume. Look on the left, there's hardly any volume in that letter V area. So that makes it susceptible. Let's say we have an out-of-the-blue shakeup in the markets. Blah, 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 headline this, headline that. This one would have no good support. It has immediate good support from the yellow zone. It's right there, around 177 from all this chop. But then if you lose that for whatever reason, you don't have a lot of good support. So we're zooming in to see where we do have decent support. So immediately I can look at 189, 188 area as resistance up in this zone right there, the yellow. And immediately I can tell that losing 182 could get you down to 177. So that's the tight zone, 82 to 88, 89. And that is, boy, they filled that one pretty nicely. So those are the limits for now. Taking out either of those two lines will have travel in that direction. For example, if we take out 188, 189, we're going to have no problem pushing into a new high. Versus on a red day, it might slip down to 178, 177. It does have a lot of short-term support. If you look left, there's one tick down to 166. That should be like super strong buyers right there. We shall see how that plays out. All right, APPN. So negative reaction on the earnings. Whoa. And the fact that they fell below 35 is a little scary from the perspective that now that becomes a pretty hard area to get above. So I believe the person that's asked for this asked about some credit put spread, and they're trying to avoid maximum loss. So if my credit put spread is above that level, I wouldn't want to stay in it for the hopes of pops, because time becomes your enemy. So I would want to resituate it down and out at least, so that I don't run out of time. But the problem is with credit put spreads and credit call spreads that go bad, people tend to make them bigger to like not have to pay a lot of debit. I wouldn't do that. I don't know the business. It seems okay. I mean, it's a growth company that doesn't make a lot of money, that loses money by design because it's a growth company. So do your homework on it. It seems like 32 is a big pivot. You don't want to be under 32. I don't know how quickly you can recover that. Let's see here on a longer term basis. Okay, so I must have commented on this one recently. So this was prior support that they lost, and they're fighting through. They do have support. Anything below 31 should be unusual, especially with that long candle from earnings. So, but you don't want to lose 31. And you do have a lot of resistance above. So it's kind of a pickle. So it's one of those stocks, if you believe in the company, you get assigned shares. All right, so I'm going to give you whoever's asked for this on a credit put spread. Some credit put spread, folks, is when I sell a put and I buy a put below it and I collect a credit. Well, now price is below inside this zone. What sometimes I do, if I don't mind owning shares, I'll say, you know what, give me the shares, and I'll sell my protective put and make my break even lower than what it actually is. So that's something to consider. I don't do it in every stock, but if it's stock I don't mind owning shares in, I can. ARKK, so this is Kathy Wood company. The top 10 usually in this company are 50% of the ETF. So typical stocks in those are Tesla and company. I don't know what to say about this. Markets at all. This is basically like this. It behaves almost like the small caps, I would say. The lines are there. This is a daily chart, big picture. You can tell that there's a lot of resistance through 48, 49, and a lot of support. If you give way on the support, you're going to come down to 37. So if we zoom in closer, you can see how tough it is, the resistance. So what's it going to make it to come back above here now that the earnings are gone? Most of the earnings are out of the way. So what's it going to take it above that mountain of sellers above? It seems like on the 15th of April, that was a huge drop. And so the market fell apart on April 15th, if you remember. The market finally recovered, and now we're at all-time highs. And this one is still buried below the April 15th level. Not good. Okay, so you have to see who are inside this stock and how you're managing your risk with it. Okay, there's no urgency to get long is what I'm saying. Broadcom, excellent company, giant contributor to the indices. And let's see here, what do I have? We were discussing it at a big picture. So basically, this is the stock market. It just made a new all-time high. It's a couple of ticks below that. If we zoom in a little bit, you will see what areas they're fighting for. So anything above 1440 should give you more upside, even like $60 to $100, just for momentum purposes. And anything below 1360.50 should find support, and it's spread. So I think those lines, I remember what I was like, really the only way that this stock trades so aggressively. And if you look at the P&L, it is so good, it's fake looking. Look at it. It's a pristine company as far as P&L is concerned. If you want to teach a class about how to construct a company, you would say, okay, you want your P&L to look like this. Yet it trades like Apple, choppy beyond expectations. So the only way I would trade this with complete confidence is just sell naked puts and naked calls on it, like 6 months out, a mile below and above current price. But not a lot of people can do that. This is a gigantic stock. So you got to believe in the company, accumulate stock for the long term. As long as technology is the way it is, these guys are on top. This here is not an obvious entry point. American Express, speaking of not an obvious entry point, but this is the definition of not an. I don't care how good the company is. You missed all of it, so might as well wait it out. So, but this is the picture I was trying to explain on Apple. Okay, when a stock goes from point A to point B, like this one did, point A to point B, and then it consolidates for months and months and months, and then it breaks out, it often goes as far as where it came from. So then the question becomes, okay, so where do you start? In this case, I could argue I would start here somewhere. So this is more of an entry and exit, that like a termination point versus a starting point. So the easiest, nicest way I could say this here is not an obvious entry point. The acronym is NOPE, not an obvious point of entry. NOPE, N-O-P-E. If I waited this long, I can wait a little bit longer to start longs. If I'm looking to short, I have no reference. It's an all-time high. then what are you shorting, right? So you need a reference point. Boeing, the long position worked. It was a little struggly because of all the headlines. I told you, I warned you that the bad people out there were assaulting it with bad headlines. Some people think it's a mismanaged company, whether that or not, but you can't get around the fact that it was an all-out assault with fake news and real news mixed in with some fake news in order to create shock and awe. The sold put worked, and I'm happy with that. I'm not going to add to my position. It's coming into earnings sooner rather than later from my perspective, and I will be out of the stock before the earnings hit. Believe it or not, this is a duopoly, and the company that it's competing with is stretched to the max. Get it? Max. Boeing. Okay. They're going to sell every plane they make. And the way they recognize sales is kind of wonky, but there's nothing bearish about this long term. Meanwhile, I wouldn't start longs here. Those two purple circles were pretty important. They lost the bottom end of one. So if I sold a put or a put spread, I have greens. I said I closed mine. I did close partially, but I had some naked puts sold at 160 or 55 or 65. I can't remember. I left those, and now they're a lot cheaper to buy back. I wouldn't go long going into this upper zone. Sellers are lurking. So it's not a good starting point. Okay, so Blackstone, they burst through the letter R because banks last week, I could not explain it. I don't know what's going on with the banks. Something that economists must see that is incredibly good for banks the way we are. I honestly don't see the change in their particulars, except to see that a lot of defaults are coming up. If they tell me that debt is at a record level, well, some of these banks, I don't know about this one, but some of these, quote, banks in the XLF are on the hook. Unless the government is going to bail everybody out, I just don't know how this movie is going to end in a good way. So what does that mean? I don't go long banks at the upper ends, and I don't short them at the lower ends because they're usually good values. So this one, letter R, they busted through it like it's not there, and now they fell back into that red line. So they should have support through 121. And they should have a lot of seller through 129. Because the alternative would mean that this stock, the reason why I wouldn't short it, if indeed that this is now support, new support found from the breakout, because this was the breakout, that means you're telling me that this is going to happen. And if that's the case, then this one is going to 150. I find that hard to believe, but that is the alternative. Inverse head and shoulders with 150-ish. Let's see here. I'll give you an exact amount of what the upside. $15 from here, so we'll go 30. Yep, 145. So if they break out of here, 145 could be the potential target in a series of higher highs and higher lows. So be careful I would not short it here. This could be a good starting point for a trader. If you assume the letter S for support, then they might rise all the way up there. I wouldn't hold calls. I would sell a put spread, buy call spread, and see if it works out. I'm not familiar with this company. Danger, technically, losing 1250 and 13. You need to recover those. Otherwise, you're probably going to 10. Be careful. Okay, then we have jokesters in here. That's funny. CHWY. So I've always said, show me all the bad news in CHWY, and nobody could show me. Everybody speaks that it's bad news. Amazon is eating their lunch, their bad margins, and I don't see it in the P&L. The P&L is still growing, so you can't prove a negative that Amazon is eating their lunch. So maybe they're eating opportunity costs from them or opportunity income from them, but it's not visible. Terribly visible, and the margins have not shrunken. So I call bull on everybody that's a naysayer on CHWY. Until I see it in the P&L, I don't believe it. It's speculation. So ideas, that's fine. I'll take the other side until I see it develop in the P&L. Whether it's a great opportunity to start or not, it's stuck in the middle of a zone. Think about it. The low, 15. The high, 18, 19. We're right in the middle here. So if I wanted to buy shares for the long term, I can. My only concern is that the markets have never been higher. What if the market's correct? This one will fall as well. So as I suggested before, buy half the shares you want, and if it goes down towards 10, double up and forget about it. That would be a typical old school investment in CHWY. Meanwhile, you can sell puts to own shares below, and if you don't get a sound, you make money off of it. Either or. The risk is the same. Actually, it's safer to sell puts if you want to own the share anyway. Costco, great company. Good starting point. I don't think so. It's in all-time high. I don't ever believe that it's an all-time high unless you're a momentum buyer. Buy high, sell higher. What are we chasing? What did you find out this week that tells you, okay, I've waited out a zillion points and now is the time to jump in? I don't understand that. Maybe I'm a little sore. I went to Costco yesterday to buy a TV and they were closed 6 o'clock on Saturday. What? Are these new hours? I don't remember them being closed at 6 o'clock. Great company, nothing against it. P&L is awesome. Management's great. Employees are great. I have nothing bad to say about it except that this here is not an obvious point of entry. That's the simplest thing I can say. Well, where is 745, 740? The breakout. I'm patient. If I'm not long the company, I missed it. So I know what Burna is, the ungun. Okay, right? Yellowish, orangish. Okay, now I know. I thought that was it, but it's like plastic. Lethal, not non-lethal defensive armaments. Something like that. Now I know what it is. Okay, CRM. Good company, good management. Vulnerable chart from the standpoint that the market made a new all-time high and these guys have not. And more to it, what's with that giant hump above 292? That is pretty scary to be above you and you wanting to start longs. That mountain of sellers. So I'll show you in a second. Oh, there it is. Anything above here, anything above these two lines with the letter R, it's a mountain of sellers, just like you have a mountain of buyers. So here's the problem. Markets have never been higher, and this guy, arguably, you can say since March, has been making lower lows and lower highs. So if it's too much to get to 300, can it hold 265? If it's too much to get to 300, can it hold 265? Because if it can't, if it loses 265-ish, it's going to fill that gap down there. So the downside is about this big if it loses it, in theory. It does have a lot of supports along the way. So I will put some lines on here. Like right here, zone, that's a lot of support, secondary support. So I'm going to say S and S. And anywhere down here, awesome entry point. So how can I get this early? I can sell puts down there. So what's going to get me there? 10 days, earnings, whether a new high or fill the gap, that's probably what's going to happen. Until then, you're going to have to, I tell you what, for the earnings, if you don't know already, we guess pretty well. Why? Because we look at the options, and the options is where the market makers' money are, right? So we look and we think where they want to be. And this earnings season, we crushed it. We guessed really well. I can't send them out in writing because they need a lot of verbal explanation. So if you have a minute, before, let's say CRM reports on a Wednesday night, you come in Wednesday day into the live room for like a few minutes and you ask me, hey, what do you think of the earnings? Late in the day, the later the better, before the market rings the bell. And I'll give you an idea as to where the options are looking they want to be. CVS, I don't want to touch this stock. This chart is ugly. It has a lot of upside potential, but boy, is that an ugly chart. So I don't know how much of this gap they want to take. I'm thinking they could get to 63, but how many times is it going to think, oh, like here, people thought that this was as ugly as it's going to get. And then, yay, and then what? So I remember discussing this with a few people, one person in particular who's no longer in the group. And he was stuck in the 80s because he sold puts before the earnings, ill-advised sold put into the earnings, and then got stuck in it for a long time. So I would not want to touch this stock. I honestly don't know where the bottom is. So people that are here, they thought that this was the bottom. People here, they thought this was the bottom. And people here are thinking this is the bottom. I can tell you if it loses 52, no idea where it goes. I mean, we're talking levels from 2012. when the markets cannot stop rallying. It's just why? If I'm long with this, I would protect myself. Okay, Chevron, bearish setup on the daily. No earnings anytime soon. Above 168, it could get to 176, but you also have to look at the price of oil. So let me take a peek on CL, crude oil future. Okay, so oil was bearish. It played out to its first bearish level. The second bearish level is 71 and 70 from this red W. Okay, so this might bounce to 84 first. So what I'm saying is that Chevron could have help to get above the hump. Otherwise, it should drift to 157 again. So already, this red W already hit target 1 once, twice arguably. Let's go with once. Target 2 is 151, 150. Target 3 is way down here, but anything below 146 is an outstanding entry for this environment, for this guy. Great company, great management. So no knocks against that. But I just don't see the urgency to get long up at this level. You have buyers into 155 and sellers into 172. Those will be the immediate comment. Shorter term, you can see it better if we zoom in. The sellers up here, the buyers starting up here being 166.67, and the buyers you can see starting at 160 and better at 157. Okay, Lou, thank you. No, I'm fine. I don't have anything against that company. Okay, Deere. Oh dear. Deere was a catchable knife. It reported earnings and disappointed. It wasn't a bad report. Look at how old this was. Resistance, now support. So we do have support. Look at this. That was pretty good, right? All right, let's take it out. So middle of the range. Look, we have just as many buyers scattered below here as above here. So Nick, that's not help. It's like a mile above and mile below. Exactly. Why is this company that has this good of a P&L trading like it's Tesla or like it's a startup with an unstable future? Why? Because it's manipulated. Because the news comes out this way and that way, and they scare us into thinking this and that. So in order to have conviction, you get long in a base and you exit once it approaches a prior sell. So I'm going to tell you that it has a lot of buyers into 350 with confidence, and they start at 380. And it has a lot of sellers where it just fell from. Anything approaching 410, 415, a lot of sellers, don't take my word for it, that's how they reacted. So if the bulls are able to take it above 415 where it fell from, you might get to 450 where you'd find more sellers. 445, 450. And any dips into 360 or lower should have a lot of buyers. So I would not be against somebody starting longs here. In fact, didn't I share something like that? I think I did. Selling puts to own shares, selling a put spread to get started on a long, buying a fractional share, not all in, because we don't know what the market's going to do. Okay. DELL, I wouldn't touch it up here. No way. Talk about not an obvious point of entry. Why now? I mean, the P&L, look at it. It's not anywhere near as good as the price action. Plus, they're always in the headline out of nowhere. Split this, split that, spin off this, go public, go private. I just don't trade it, and it's not very liquid options wise. It's a good company. I'm not dissing it. I own a DELL product, and I regret buying it because it's garbage, and it was not cheap. So this will be my last DELL product. And the company is fine. The chart says it's awesome, and I don't know where the awesomeness comes from. Let's see, statistically speaking, price to sales, let's go on an annual basis. If you want valuation for a growth company, which it isn't, the sales are not growing, but let's say we want to say, okay, it's a growth company, we want to look at the valuation on price to sales. It's miles above its normal. It's too expensive, price to sales. Look back, 0.7, 0.4, 0.6, 0.4, 0.3, 0.7, now it's 1.2. So price is way too big compared to the sales. It needs to normalize. Okay, you say it's a value company. Okay, the PE has never been this high. It's never been in the ballpark of being this high. So what metric are you chasing? That's what I'm saying. So here are the sales. Shrinkage. So what are we exciting about? The cash, maybe? Cash from operations? Nope, not even that one. Whoa, $8 billion. Okay, so what? Oh, let's go to annual. Let's see here. 7, 7, 9, 11, 10. Okay, that's 2022. Something happened here. What? What happened here? 8, 8. So what are they chasing? I honestly, this is shortable from a fundamental perspective. Just from the top line, I don't know much about it. Margins are not that great. Operation margins are good. Debt is okay. They shrunk debt quite a bit, but I honestly don't know. So this is a problem for me. The stock price is acting like it's Nvidia, who doubled and tripled its sales and bottom line. And this one is going the wrong way, and the stock is going to the moon. Be careful what you're chasing. I don't know what this is. Dragonfly Energy Holdings. Okay, not knowing what it is, we'll talk about the chart. A lot of sellers into 1.45 and a lot of buyers below 1. 1 point something is significant. Look, knock on it here, knock on it there. Assume it's going to play a role here. You lose 90 cents, you're going to 70. Dollar General. I thought they were going out of business. Just the whole segment is not pretty. So CRM, remember with CRM? This one has earnings in 11 days. So this area is like that CRM area we talked about. A bunch of sellers above. There they are. Bunch of sellers above. Look at it. Mountain of sellers. And a buyer at 134. So if you lose 134, you're going to 124, 123. I honestly don't know what they're going to do with the earnings, so we'll check it out and see what they have to say. There should be a lot to say. I heard a lot of dollar stores are going out of business or shutting them down or something like that. So I don't know if this is one of them or not, but they might have something to say. Like, oh, it's going to be awesome because our competition is going out of business. Or if it's them, it's not going to be awesome. All right, DIA, what's to say? We are at all-time highs. I will have more to say about it this evening, but let's say this is stock ABC. This here looks like a breakout, and it is a breakout. And it had a bearish setup that it just negated. So in theory, this bearish setup actually did not negate. It's still valid, but you can't use the technicals on it because the stock can go up another $20 and still be valid, that red thing here. So yes, we have a correction coming from what point, right? Which is the deal that markets are expecting so much out of everything that it's hard to short. It's an almost all-time high. The problem with the Dow is that one or two stocks in there can change the makeup of this issue. Like UNH, for example, Goldman Sachs, Home Depot, JP Morgan, any one of those stocks can prop up or make a bad day for the Dow because it's a price-weighted average and the sticker price for those stocks is high. $500 stock would move this index with just a small move of it. Would be 3 times almost as big as Apple. It's price weighted, so it's hard to trade. So be careful with that. Disney, on the other hand, is making lower lows and lower highs. So you go ask yourself, what the heck? Well, the chart said once you're lost 111, your target is 99-ish, and it's coming close enough to it. If it hits this yellow box, it fills all the weak candle spots that are obvious. So it's inside of a support zone. If you tell me the markets are going to be higher in the next month or two, this one might bounce back to 108. The only way I would trade Disney is I would sell a put spread or sell a put, which I've talked about with a lot of people. So buying calls not my thing. I would rather buy shares and sell covered calls against them immediately to hedge them. Or sell puts in lieu of shares. So if instead of buying 100 shares, you can collect money to say to somebody else, I'll buy your shares at 100. So this way you can make money off of that difference. And in the end, you might be buying the shares at a lower price. So it's a much more attractive setup. All right, I had to open my refreshment. DLTR. So okay, Dollar Tree. So one of those two is going out of business, is it not? Well, this one reports earnings in 4 days. So going back to DG, Dollar General, this one reports in 4 days. So Dollar General will move in sympathy. Look at that last move. Oof, I would not be long this stock because it could bounce to 130, but the earnings could also say it's going to 94. So I will check the earnings in 3 days. I will check the options chain and come in and talk to me about it. DOLE, the chart says you might find sellers. If you look left, that's where it faltered before, and the reaction of the earnings makes it like a thing to beat, 13.2. This spike, and it's not a coincidence where it died. Look left. It's almost classic area of selling because all of these here ticks were bearish, and then they fell apart. They tried once, twice, and here they are trying the third time to overcome. Now it's good that they're still hanging above 1260 and 1240. You don't want to lose 1220. As long as it's above 1220, it could eat into these sellers above. It's not going to be easy, but it's available. Higher highs and higher lows, but you got to hold 1220. Okay. Phase, I've almost given up on it unless it falls apart. I'm a little worried. If you click on the quarterly and you see 5 quarters in a row with depleting sales and depleting bottom line, then you think that this, if you look at the annual, you're hiding a lot of weakness. Not too happy with the fundamentals. That's for starters. Also, you can see a rally sold, new low, rally sold, new low, rally. It's being sold. Will it stop and hold levels of 108, 110 and come up to 126, or will it drift lower and retest the 100 again? We've made money going long this stock by selling puts and put spreads, but it wasn't easy every time. Every time it wasn't easy. So track any other industrial / solar company out there because this one reacts to everything. It's really hard. It's tradable, but it's never easy. Exelon this year is most definitely not an obvious point of entry. If you look at it, look at the amount of sellers above 39 and 40, 39 and a half. Everything is above here. So whatever that is, not for me up here. A dip to 37 maybe. 5 below. I keep saying I live in a pretty good town. I mean, you don't see things go out of business. This is one of 2 stores that I remember went out of business in there, and within months of opening. So I'm not so sure there that concept is working well. Although the sales look okay. And if you know the company inside and out, and you disagree with my statement, and you can, this is an okay entry opportunity because you have a lot of buyers below. Okay, it's wide down to 108, 112. But at least they're below. So you're buying into a strong dip, into a strong prior bounce level. I don't disagree with that. The only hiccup with this is within a couple of weeks, you're going to see an earnings report. So yes, 152, 160, 164 doable, as long as they hold support and it's squishy. Okay, Franco-Nevada always comes back into question here. The letter R is still it. And we're going into it, the one candle from earnings in October right there, that whole period of time and this period of time before it in March, so a year back, it's a pivotal level. This level battle is years old. So it's not likely we slice right through it. And they just reported earnings. So I would be a dip buyer here if you ask me, and rather than chasing it into this huge area of sellers above. Fortinet, it was a thing to buy on the dip, but I forget why I didn't buy it. Anyway, it's coming into 63. Look left. This was a prior big breakout level in January of 2024. Big test of support in February. Big fail in the earnings in May. And here they are coming back into it. Not a good starting point. So buy the dip in Fortinet, hoping it holds 59 or 60. Then you may have a better chance. Now, it's not to say that you shouldn't go long here if you know the company, but you should expect some potential downside on your longs if you go long now. Okay, and with that, we're ending video 1.